Good investment grade stocks.
Join our YouTube community. Be part of our YouTube journey. Subscribe now. Get exclusive content, stay updated, and join a community of like-minded enthusiasts. Please subscribe for $1,000 early bird draw.
Abraxas Petroleum Corporation, ABR, is a publicly traded company with a market capitalization of $2.65 billion. The stock has shown a 52-week trading range between $10.10 and $17.74, and the latest trading data indicates a day range of $12.73 to $13.25. The forward earnings per share, EPS, is estimated at $1.55, resulting in a forward price to earnings, PE, ratio of 8.42. Investors can also look forward to a dividend yield of 13.22%, with a forward annual payout of $1.72. ABR has displayed notable growth, with a 3-year compound annual growth rate, CAGR, in revenue of 29.22%. However, the company's year-over-year, YoY, earnings per share, EPS, shows a decrease of 14.18%. In terms of profitability, ABR boasts a solid gross profit margin of 92.00% and a net income margin of 50.12%. The stock has seen some fluctuations in its momentum, with a 3-month performance showing a decline of 18.89%, while the S&P 500 index has experienced an 8.49% increase during the same period. In terms of capital structure, ABR has a total debt of $12.69 billion, but also holds $847.70 million in cash reserves. Investors should be aware of the relatively high short interest in the stock, which stands at 24.42%. Additionally, ABR offers a dividend with a payout ratio of 95.93%, indicating a significant portion of earnings being returned to shareholders. In summary, ABR is a stock with a substantial market capitalization and attractive dividend yield. It has displayed revenue growth but has faced challenges in its YoY earnings. The stock's performance has shown some volatility recently, and the company holds a notable amount of debt alongside its cash reserves. Hercules Capital, Inc. HTGC, is a publicly traded company with a market capitalization of $2.27 billion. The stock's 52-week trading range has fluctuated between $10.82 and $17.97, while the latest trading data shows a day range between $15.13 and $15.42. Investors can look forward to a forward earnings per share, EPS, of $1.98, resulting in a forward price to earnings, PE, ratio of 7.67. Additionally, HTGC offers an attractive dividend yield of 10.53%, with a forward annual payout of $1.60. HTGC has displayed robust growth, with a strong 3-year compound annual growth rate, CAGR, in revenue of 12.97%. The company's year-over-year, YoY, earnings estimates for the next few years also indicate positive growth, with a YoY increase of 33.87% in ME for 2023. The stock has shown favorable momentum over various timeframes, including a 1-year gain of 7.12%, outperforming the S&P 500 index. In terms of capital structure, HTGC carries a market capitalization of $2.27 billion, with total debt of $1.59 billion and $61.70 million in cash reserves. Despite the relatively low short interest at 4.80%, HTGC has seen shares shorted, with 6.57 million shares in short positions. The stock has a relatively low 24-month beta of 0.96, indicating lower volatility compared to the market. In summary, HTGC is a mid-cap stock with a strong dividend yield and positive growth prospects in both revenue and earnings. Its performance has been favorable over the past year, and the company maintains a solid balance between debt and cash. Investors should consider these factors when evaluating HTGC as a potential investment option. Global Partners LP, GLP, is an energy company with a market capitalization of $1.05 billion. The stock has exhibited a 52-week trading range between $27.07 and $38.28, with the latest trading data showing a day range of $30.01 to $31. The company offers a forward earnings per share (EPS) of $3.45, resulting in a forward price to earnings (PE) ratio of 8.90. Investors can also benefit from a competitive dividend yield of 8.93%, with a forward annual payout of $2.74. Global Partners LP is engaged in the purchase, sale, and transportation of various petroleum products and renewable fuels to customers in the New England states, Mid-Atlantic region, and New York. This includes the distribution of gasoline, gasoline blend stocks, distillates, residual oil, renewable fuels, crude oil, and propane to wholesalers, retailers, and commercial customers. While the stock has experienced recent short interest of 0.98%, it has a relatively low short interest ratio, indicating limited bearish sentiment. The company's market capitalization is $1.05 billion, and it carries total debt of $1.37 billion, supplemented by $11.04 million in cash reserves. Global Partners LP has seen fluctuating momentum, with a one-year gain of 4.35%, which is somewhat ahead of the S&P 500 index's performance. In terms of valuation, the company has a P/E ratio of 4.80 TTM and a price-to-book ratio of 1.64. From a profitability perspective, Global Partners LP demonstrates a gross profit margin of 6.62% and a net income margin of 1.37%. Return on equity stands at a favorable 33.22%. In summary, GLP is an energy company with a moderate market capitalization, a competitive dividend yield, and positive earnings estimates for the future. It engages in the distribution of various petroleum products and has shown some momentum in its stock performance. However, it carries a significant amount of debt relative to its market capitalization, which is an aspect for investors to consider. Bayerische Motor- und Werkaktiengesellschaft, BMWYY, is a well-established company engaged in the development, manufacture, and sale of automobiles and motorcycles, along with financial services. With a market capitalization of $61.27 billion, the stock has demonstrated a 52-week trading range between $24.57 and $41.20, while the latest trading data shows a day range of $31 to $31.36. Investors can anticipate a forward earnings per share (EPS) of $6.84, resulting in a forward price to earnings (PE) ratio of 4.71. Additionally, the stock offers an attractive trailing 12-month TTM dividend yield of 9.55%, with a TTM annual payout of $3.08. BMWYY operates through three segments: automotive, motorcycles, and financial services. The automotive segment includes well-known brands like BMW, Mini, and Rolls-Royce. The company sells its products worldwide through independent dealerships and importers. The stock has shown positive momentum over the past year, with a one-year gain of 23.15%, outperforming the S&P 500 index. In terms of capital structure, the company carries total debt of $104.80 billion, supported by $17.05 billion in cash reserves. From a valuation perspective, BMWYY has a low P/E ratio of 5.05 TTM and a price-to-book ratio of 0.66, indicating an undervalued status. In terms of profitability, the company demonstrates a strong gross profit margin of 17.39%, a solid EBIT margin of 11.17%, and a return on equity of 13.35%. In summary, BMW YY is a globally recognized automobile and motorcycle manufacturer with a competitive dividend yield and attractive valuation. Its strong momentum and financial performance make it a potentially interesting investment opportunity, although the company carries a substantial amount of debt, which investors should take into account. PT Adaro Energy Indonesia Tbk, ADOOY, is a company operating in the coal and mining industry in Indonesia. With a market capitalization of $5.19 billion, the stock has shown a 52-week trading range between $6.60 and $13.25. The latest trading data reflects a day range of $8.76 to $8.77, and it has a trailing 12-month TTM dividend yield of 18.70%, with a TTM annual payout of $1.64. ADOOY operates through several segments, including coal mining and trading, mining services, logistics, and others. The company provides a range of services, including trading, transportation, warehousing, quarrying, cargo handling, mining, and transportation support services. It also offers services related to agriculture, construction, seaport, power supply, and water treatment. From a valuation perspective, the stock has a low price-to-earnings (PE) ratio of 2.42 TTM and a price-to-book ratio of 0.81, indicating it may be undervalued. ADOOY demonstrates strong profitability, with a gross profit margin of 50.67%, an EBIT margin of 44.79%, and a net income margin of 26.79%. Additionally, it boasts a high return on equity (ROE) of 39.63%. In terms of momentum, the stock has shown positive 3-month growth of 3.18%. While its revenue is expected to decrease in the coming years, it has demonstrated substantial revenue growth and earnings per share (EPS) growth in the past. However, investors should be aware of its total debt of $1.52 billion, although the company has $2.83 billion in cash reserves. In summary, ADOOY is an Indonesian coal and mining company with potential undervaluation, high dividend yield, and strong profitability metrics. The company has shown historical growth in both revenue and EPS, making it an interesting stock for income-focused investors. Federal Agricultural Mortgage Corporation, AGM, operates as a provider of a secondary market for various loans in the United States. With a market capitalization of $1.52 billion, the stock has shown a 52-week trading range between $111.28 and $180.16. The latest trading data reflects a day range of $142.92 to $147.05. It has a forward dividend yield of 3.08% with a forward annual payout of $4.40. AGM operates through various segments, including corporate ag finance, farm and ranch, rural utilities, and renewable energy. The company's agricultural finance business involves purchasing eligible loans and securities, guaranteeing payments on securities, and issuing long-term standby purchase commitments (LTSPCs) for eligible loans. The rural infrastructure finance business includes the purchase of rural utilities loans, renewable energy loans, and guarantees of securities backed by these loans. From a valuation perspective, the stock has a forward price-to-earnings (PE) ratio of 9.34 and strong profitability, with a gross profit margin of 100.00% and a net income margin of 57.16%. AGM has shown 11 years of consistent dividend growth. AGM has a total debt of $26.06 billion and a cash reserve of $902.26 million, indicating a high debt-to-equity ratio. The company has demonstrated strong revenue and earnings growth in the past, which is expected to continue in the coming years. In summary, AGM is a mortgage finance company with a solid dividend history, a reasonable forward PE ratio, and strong profitability metrics. However, its high debt levels should be noted by potential investors.
Buying good stocks can be a good investment for several reasons. 1. Potential for capital appreciation. 2. Dividend income. 3. Diversification. 4. Liquidity. 5. Ownership and voting rights. 6. Historical returns. 7. Inflation hedge. 8. Professional management. 9. Tax benefits. 10. Accessibility. It's important to note that while investing in good stocks can offer significant advantages, it also carries risks. Stock prices can be volatile, and there is no guarantee of positive returns. To make informed investment decisions, it's essential to conduct thorough research, consider your financial goals and risk tolerance, and, if necessary, seek advice from financial professionals.